for every 1 ounce of physical gold, they created the banks, created 62,000 digital ounces of gold. Do you think that could suppress the price? Yeah. But at the end of the day, this is an asset that runs no counterparty risk. You hold it, you own it. It is out of the system. It is invisible to the central banks. It has the broadest base of buyer.
Gold and silver were recognized as precious metals and were highly coveted by ancient civilizations. Precious metals still have a place in the savvy investor's portfolio in modern times. Precious metals are a way to diversify an investor's portfolio and can act as a hedge against inflation. Although gold is the most common investment in the precious metals industry, it's not the only one for investors. Silver, platinum, and palladium are commodities that can be added to your precious metals portfolio, each with their own risks and opportunities. A number of factors make these investments so volatile, including supply, demand, and geopolitical issues. In today's video, we'll tell you why Lynette Zang believes that gold and silver will go much higher, even after big players' manipulation. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. Banks have the right to take our funds and use them in our best interest. This is called sweeping our money. When we make a deposit, they put it into sub-accounts that are in their name, and they can do whatever they want with that money. If the bank fails, they actually have the right to keep that money and leave us shares of that failing bank. The global economy and central banks are between a rock and a hard place with all the new money they've been printing, especially since 2008. That's actually the kind of experiment they've been doing since 1913. But seriously, since 1971, when they took gold out of the monetary system or the financial system, that's when we eliminated all tax obligations. The Fed says the banks are strong. They have a lot of them, and they're looking at all those estimated dividend payments and estimated share buybacks. But the question is, are they really strong enough to handle hyperinflation? We'll know it in the future because we don't think we are very far from this test. The real estate market that has already peaked and is falling in mortgages as well as many other fiat currency assets, so the banks stopped creating markets. In other words, the bond is down and a commercial bank would step in and buy a bunch of these bonds, keeping them on their books, and then resell them to their customers. It kept going down. Therefore, the liquidity of the market is going to be much worse. The problem that the central banks created with all that money printing and all their spin, now they're trying to change that. They're trying to drain their balance, which didn't work from 2016 to 2019. They're trying to raise interest rates, which didn't work on their last try in 2016 to 2019. All countries that have tried quantitative tightening since 2009 or even increased rates have been forced to turn around. And no doubt the same thing will happen again. The only way to fight deflation is with inflation, and the only way to fight inflation is deflation. With high inflation, the Fed can raise interest rates and use this to slow down the economy in an effort to control inflation. Basically, the Fed's policymakers aim to make borrowing more expensive so that consumers and businesses refrain from making investments, thus dampening demand and hopefully keeping prices low. The US dollar exchange rate plays a role in inflation. For example, when US exports are sold in Europe, buyers must convert euros into dollars to make their purchases. If the dollar strengthens, the higher exchange rate causes Europeans to pay more for American products based solely on the exchange rate. Therefore, US export sales could decline if the dollar is too strong. When we talk about precious metals, silver is more volatile than gold. It's still a safe investment compared to stocks. As a result, when market conditions are bad, investors tend to sell their shares and flock to this type of asset, tipping the balance of supply and demand and driving up the price of silver. Investing in gold is a more stable option and acts as a strong store of value. Gold prices tend to move at a slower pace. The stable spot price of gold adds a level of security for investors.
When I'm looking at the difference between just bullion gold, monetary gold, or collectible gold coins, because I think that the same rules are likely to apply. Eminent domain means that they have to pay you fair value, but guess what? They'll get to dictate or determine what that fair value is. This is what I want to make sure I'm holding. I have some silver too. That's barterability. I have a lot of silver too, but that's for barterability. This is for wealth preservation and growth.
That's all for today. Let us know your views in the comments section below. And don't forget to like this video before leaving. Thanks for watching.